The Monetary Policy Committee of the Bank of Ghana has kept its key lending rate unchanged. The committee maintained the rate at 16%, citing some favorable economic and inflation outlook. It is the second time this year that the MPC has left the rate unchanged. Speaking at a news conference a while ago, Governor of the Central Bank, Dr. Ernest Addison, stated the bank is ready to respond depending on prevailing market conditions.
Issue further, banks are working to strengthen their credit risk management practices and loan recovery efforts. Summary and outlook. In sum, the committee observed that global growth has moderated with downward revisions for both advanced and emerging market economies. The slower pace of growth is expected to continue over the first half of 2019, underpinned by escalating trade and geopolitical tensions. Although core inflation remains subdued, global inflation has picked up slightly on the back of higher oil prices. Forecasts show that inflationary pressures are expected to remain contained, influenced by moderate wage growth and concerns about the health of the global economy. The accommodative monetary policy stance by most advanced economies broadly offers some scope for favorable global financing conditions. This could have positive implications for emerging market and frontier economies with strong macro fundamentals as investors search for higher yields. These developments could impact positively on Ghana through the trade and credit channels. On the domestic front, economic growth remains steady and is projected to gain some additional momentum over the horizon, supported by crude oil production. Early indications already show that economic activity in the first quarter is picking up pace, as evidenced by the bank's CIEA. Other factors, such as improving business sentiments and credit growth, are supportive of growth in the outlook.
All right, so we want to get more from our man, George Rafi, who's been covering the event all this morning. He's still at the Bank of Ghana premises where the event ended a while ago. We'll be linking up with him shortly. Now, George, if you can see me, what exactly were the reasons the governor cited for holding the policy rate at 16%?
So we have let's just a little breakdown or trying to connect to the issues very well. Now, the policy rate is the key lending rate or the rate at which the Bank of Ghana lends to commercial banks that will tend to it for any liquidity issues. So they use this policy rate as a measure to try and check the amount of money in circulation. So if you have any concern that going forward there will be issues with inflation or the economy is not going at the rate that you want, you would want to use this rate to do that. Now, the governor is saying that fast forward, trying to project, looking at the crystal ball the next 2 or 3 months, they don't think that the economy might come under any serious pressure where you want to respond by cutting down the rate or even increasing the rate. They've done their extrapolations, they're looking at the outlook, and they believe that things are quite favorable. Therefore, let's still monitor things out there. Let's look at how things will look like before we respond by increasing the rate or reducing the rate. They believe that if you look at the inflation rate, if you look at the economic growth, things might not be under threat. And therefore, let's keep the rate at 16%. Let's observe things and then we'll act.
Now, I believe he might also have been talking about the impending reforms in the microfinance sector. What has he been saying?
Well, you are right on that one, and you recollect that in our reportage, the Joy Business actually talked about the fact that the Finance Ministry has released some almost $1 billion Ghana cedis to help with the cleanup of the microfinance sector as well as the rural banks. Now, what the governor is saying is that they've learned their lessons from what they did with respect to cleaning up the commercial banking space. And therefore, they really want to take their time a little bit at doing further engagement with players in the sector before they go ahead and with the process of cleaning up this microfinance space. They've had the money all right, they've done all the engagement, but they believe that they need to do further engagement with players in this space before they go ahead with this action of cleaning the micro and rural banking space.
Now, lastly, before you go, what about the marginal stability of the cedi against the US dollar?
Yeah, you're right on that one. And if you cast your mind back to the Economic Intelligence Unit, their outlook and prediction that the Ghana cedi could come under pressure again this year and even going into next year and even 2023. The governor believes that they have their policies right. They've also been watching this space, and he doesn't think that with this forecast or what the Economic Intelligence Unit is pushing across, that the cedi will come under some pressure would really happen, because they have their measures in place and they believe that what they are doing, they are on the right path, and therefore we won't get there in terms of the cedi getting into another round of sustained depreciation. Yafe.
All right, many thanks for that update, George. We have been reaching us live from the premises of the Bank of Ghana. We also have with us, or we have an economist from the Institute of Social, Economic and Statistical Research at the University of Ghana, Professor Peter Quartey, standing by for some updates on this current development. Prof, now what is your take on this particular decision to maintain the policy rate?
Well, good afternoon to your viewers. I could see you are struggling with a long name. It's the Institute for Statistical, Social and Economic Research, ISE. Yes. The policy rate for me, maintaining the policy rate didn't come as a surprise because if you look at the key variables that the monetary authorities use, that is the central bank, inflation rate, inflation outlook, exchange rate depreciation, GDP growth, all of this have shown relative stability, and therefore you wouldn't expect the central bank to adjust the policy rate. So for me, I think it's in order.
Now, government the governor had also in the past talked about stimulating growth and improving credit. Such actions may not help. What's your take on
this? Can you say that again?
Well, so I was saying that the governor had in the past talked about improving credit. Yes. Now, these things will not help with an increase in the policy rates. What's your take on this?
Yes, we've noticed that the lending rates are sticky downwards. In other words, when the policy rate is increased, you see the banks responding by also adjusting their rates upwards. But when the policy rate comes down or is reduced, you don't see such marginal decline in the bank lending rates. This is also because there are several factors that determine interest rate. It could be the policy rate, it could be cost of credit, or cost of funds, and many others, including default rate. And therefore, you will find that although the central bank moves its policy rate, lending rates don't come down. Also, access to credit doesn't improve as significantly as one would expect. Because if the default rate or the risk environment is high, I would, as a bank, would not lend to risky borrowers. Because mind you, these are public funds, these are depositors' money that would have to be kept, invested, make returns, and paid back to them as and when they need such funds. And therefore, the policy rate alone will not determine how much credit is put in the system. we need to look at other factors like the cost of doing business, for instance, the credit environment, the risk environment. These are all critical for lending decisions.
All right, many thanks. But before you go, do you think we are losing the fight to contain the rising debts, especially with these latest figures being churned out by the Bank of Ghana?
Well, debt has been a problem and continues to be a problem. The signal of the condition for us is to look at to what extent are we using the debt? How well have we invested the monies we borrow? That is very critical because we need to channel these funds into investment to yield the needed growth. So if we are borrowing and investing and GDP growth is increasing, our debt GDP ratio would not exceed the threshold. But where we borrow and put into consumption, that is where we have a challenge. The fight against rising debt remains a challenge. I don't think we have won, but we can't stop borrowing because we need these funds to invest to generate the needed jobs.
All right, many thanks for your input. Professor Peter Quartey is an economist with the Institute of Statistical, Social and Economic Research. He's been sharing some thoughts on the latest policy rates as churned out by the Monetary Policy Committee. He's actually maintained the rate at 16%. So we want to stay further on the policy rate. And Philip Namfuri, my colleague, has joined me now to take a look at some declining trends in the policy rate over the past 2 years. Now, Philip, before you even started, what's your take on the latest policy rates?
Well, I think given where inflation was heading, the creeping manner in which it was going up, I think the Bank of Ghana has done a fantastic job holding the rates as where it is. With the governor's speech or comment citing that the threats to inflation are contained, I think is right. We need to monitor carefully in the next 2 months to see what will happen in July come the next Monetary Policy Committee meeting.
Right. Now, let's take a look at the trend. Over the past 2 years, we've had policy rate declining. What does it actually tell us?
Okay, so I would like our viewers and listeners to look. I prepared an infographic to show exactly how the policy rate has come down since 2017, the beginning of the year. Let's take a look at that. January down to April 2019, and we have this rate May. So if we had added it after, we'll see 16%. So you see that from 25.5%, it's come down all the way to 16%. The last MPC was in March, and we have this one in May. Like I said the last time, they meet on a bi-monthly basis. Exactly. So every 2 months we have a change. You can see that they held the rate twice, in July and September of 2017. Then in November and January 2018, 17 and 2018, the rate was also held at 20%. Came down again by 200 basis points to 18%. Came down again by 100 basis points to 17%, and was held for 4 consecutive Monetary Policy Committee meetings.
So with all these declines, do we have a corresponding, drop in the, in interest rates?
Fantastic question. So I prepared another infographic that shows the movement of the policy rate vis-a-vis the lending rates. Let's take a look at that too.
So these are the lending rates or the interest rates?
Exactly. So average lending rates by the Bank of Ghana. And you see that January 2017, it was at 31.8%. Okay. It's come down to April 2019 to about 27.67%. Some would argue it's still high, but like the good professor was saying, there's no one-to-one relationship between the monetary policy rate and the lending rates. Previously, banks were using the base rate. And let me go back a bit. Anytime the Bank of Ghana moves the policy rate, it's supposed to affect lending rates, which will affect what you and I are going to borrow from the banks, which will in turn affect the aggregate demand of goods and services in the economy. So its tool is to transmit. That's why there's a use of the word transmission mechanism. But unfortunately, it's not been working with the old base rate. So Bank of Ghana puts in what they called the Ghana reference rate. They, together with the Ghana Association of Bankers, to see if anytime the policy rate moves, that formula should kick in. Unfortunately, there's been a slow pace because other things hinder the lowering of lending rates in the country. The non-performing loans is one, for example, and other things within the banking industry. Okay. So it's not a given that once the policy rate is going down or being stayed at the same place,
the lending rates should equally go down.
Other factors feed into the lending rates. But you can see that as the policy rate has declined, lending rates on the average have also declined, but at a smaller or marginal pace.
All right. Thank you very much for now. We'll be looking at it more further in our subsequent bulletins.